Good day, everyone, and welcome to this week's Business and Investment Tips program, a production of RCCG Christ Church Radio with Ayodeji Ebo, an investment professional. This week, the focus is on taking advantage of the high fixed income interest rates. The Monetary Policy Committee of the Central Bank of Nigeria raised interest rates twice this year, a move targeted at bringing inflation under control, 31.7% as of February 2024, and encouraging investors to invest in Naira assets, which would support the exchange rate, touched the low of 1,900 Naira per dollar in February. The monetary policy rate has increased from 18.75% at the end of 2023 to 24.75% as of March 2024. Higher interest rates translate to better returns for investors on the fixed income market, and that exactly is what we are focusing on this week. A review of the interest rate environment in the last 6 months shows a significant increase, which is great news for investors. However, we believe that the high interest rates won't be sustained for too long if the inflation rate tapers and stability is achieved in the exchange rate. Moreover, we think the rise in interest rates has approached its peak. Hence, we're discussing strategies investors can adopt to take full advantage of this opportunity. Some of the fixed income instruments you can invest in, apart from fixed deposits, include 1. Nigerian Treasury Bills. Due to the significant increase in interest rates in Nigerian T-bills, we have seen sizable interest from investors, both domestic and foreign, with a total of 1.8 trillion Naira subscription at last week's primary market auction. The average rate at the T-bills primary market auction rose by 13.8 percentage points from 6.3% in September 2023 to 20.5% in April 2024. In the secondary market, the average yield increased to 20.8% as of Friday, 12th April, from 12.1% in September 2023. As noted earlier, this high interest rate may not last for up to a year if the microeconomic variables improve. As a result, we will suggest you invest more in long-dated tenors like 364 days, as a reversal to the interest rate will not affect you until the maturity of your investments. The minimum for investment in Treasury Bills is 50 million Naira for the primary market and 100,000 Naira for the secondary market. This may also vary across banks and investment outfits. 2. Federal Government Savings Bond. The Federal Government Savings Bond rates increased from an average of 11.5% in September 2023 to 16.5% in April 2024. The 2-year and 3-year tenors closed at 16% and 17% at this month's auction. We expect this rate should be maintained at the May auction. If you invest in either of the two maturities, it means you will enjoy the rates for 2 or 3 years, even if the interest rates come down. The minimum investment is 5,000 Naira and the maximum is 50 million Naira. Interest is paid quarterly on a prorated basis. You can subscribe through your stockbroker. 3. Commercial papers. Due to the rise in interest rates of Treasury bills, the interest rates on commercial papers have also increased, hence it's more attractive. The common maturities are 180 days and 270 days. Hence, we will recommend going for more of the 270-day tenor to take advantage of the higher interest rates than the 180-day tenor if you have the capacity to hold until maturity. You can also access commercial papers through your stockbroker or investment outfits. The minimum is 5 million Naira, but some companies do set the minimum to 1 million Naira. 4. Federal government or corporate bonds. This is recommended for investors with long-term funds, as maturities can be up to 40 years. Savvy investors purchase bonds when the interest rates are high. The average interest rate has improved by 4.7 percentage points to 20.1% at the March 2024 bond auction from 15.3% in September 2023. A similar trend was observed in the fixed income secondary market. For instance, if you invest at a yield of 20% for 10 years, this means that you will enjoy this rate even if the interest rate goes down by 5%. You may also miss out on any upside if the interest rate continues to go up. However, this is unlikely to be significant given the historical trend of the interest rates. The minimum in the primary market is 50 million Naira and the secondary market is 20 million Naira, all subject to the minimum set by your investment outfit. The interest is paid twice every year, which is every 6 months. Given the current high inflation rate, it's crucial to seek investments with higher returns to protect the purchasing power of your savings and investments. By adopting these strategies, you can potentially maximize your returns and safeguard your savings, offering a promising financial future. Thank you for listening. Please join us same time next week for another interesting and insightful session. For questions, comments, and feedback, kindly forward to ebo.ayodeji@gmail.com or send an SMS to 07082463747. Stay blessed.